If you change your trading style. If you're losing, if you're a profitable trader, then I might not be talking to you. But if you're not a profitable trader and you don't know what's going wrong, maybe these three killers, account killers, trader killers, or whatever you want to call it, is something I want you to think about. So let's just jump right into it. And in these next little few minutes, these three silent killers, I'm going to give you a rule on how to avoid each one. So if it's a killer and you see it before it sees you, you can get away. That's what I learned a long time ago. You have to see the tiger before the tiger sees you. And that's what the market is sometimes. The market can be a tiger. But if you are wary and you're paying attention and you're making the proper moves, proper risk management, good due diligence, doing your homework, and stuff like that, then you can make a lot of money in the market. The market can be your best friend. It can take care of your children, your grandchildren, help you create that generational wealth that you hear everybody talking about. That's the goal. Not making everybody else wealthy, but doing something to create wealth for you, your family, and your kids. So just understand, investing carries risk, trading carries risk. There's risk involved in the stock market. But you can take calculated risk and you can make good investments and you can just change your life and the quality of your life the same way that I have. So with that being said, let's just get to these account killers that if you can get a hold of them, then you can make a lot of money and do very well for yourself. Account suicide is what I call it. So the very first thing that you need to know, that if you have a good strategy, and it really might be good, but it's not working, maybe you're doing the wrong math, because mathematically is where you're gonna understand how to avoid the first risk, account suicide. And that's by just risking 1% of your capital. If you got $10,000, say for instance, you start trading with $10,000. You only wanna risk $100 of that $10,000 on any given trade. And this is to help you not be so emotionally invested in a trade. If you're emotionally invested in a trade, you're gonna make mistakes. You're either gonna stop out too soon or hold it or not hold it long enough, to take advantage of all the gains that you could make. And that's one of the traps that the market sets, is to fake people out. The market will fake you out, have you selling before you should sell, and have you taking profits before you should take them. So understand, risk management implies not risking your capital, not overtrading, and not being greedy. So just understand, risk management is the number one thing that you must do. And if you're only risking 1%, maybe 2% of your capital on a trade, then you're gonna be well on your way to getting rid of that bad thing that can happen in trading by trading more than 1 to 2%. The next thing is having hard stops. So keep a hard stop loss on your trades, not a mental stop loss where you can just say, well, I can go down another 5% and I'm out. And then that comes another 5% and I'm out. And you keep on saying you're out until next thing you know, you're down 50% and the stock has to move 100% just for you to get even. So now you're holding and hoping and praying, which is where you don't want to be in the market. You want to be precise. You want to be sure of what you're doing. So when you get in a trade and it doesn't go your way, get out, let it go. Just get out and save your money, and take that first loss is your best loss, because you lose that first money, then you get a better idea on the direction of the market. And if they shook you out, then cool, you get back in when you see the stock come back to your price. So that's one thing. Another thing, silent killer number 2, is boredom. It's getting bored. So you get bored, so you want to get in the market and just trade just for the hell of it, because you think you're trading good. So then you're going to end up trading not A+ setups. And in the markets, you want to trade A+ setups. That's why I always preach patience in the market. Patience pays. If you look back there on my board, you can see patience pays. I keep that as a reminder. I also keep price action and all that stuff, but patience pays, because if you sit and you wait and you watch and you understand how the chart is moving, then you can make a lot of money. So if you lose a trade, you lose two. If you lose 3 trades, it's time to get up and walk away. Get up, walk away, and calm down. Even come back the next day. Don't even come back that day. Come back the next day. Refocus. Wait till the market is closed and look at the charts and study and see where you went wrong and try to write down whatever information you had so that you can live to see another day. 3. Silent killer number 3, FOMO. The fear of missing out. We all have gone through that. The fear of missing out. So I've had it more times than I count. We all have it. We all see a price shoot up, and even if we missed a move, we convince ourselves that it's still going up, and we'll jump in, and the price will come back down because we missed the move, and we done blown the trade and blown some capital when we should have never gotten in that move anyway, because we just had FOMO, the fear of missing out. If you see a candle or stock price go up, come back down, then that might be a break and a retest. You don't want it when it goes up. Wait for the retest. Let it come back down. You have resistance up here and support down here. So if it goes up towards resistance, then that's where you're just watching and you wait for it to come back down. So you know the direction it wants to go, but it's coming back down to shake out weak hands. It's coming back down to liquidate people, to get to stop loss hunting, to take people out who have hard stop losses. But those people who get taken out with hard, short, small stop losses are the ones that are able to get back in. The ones who hold on and hope, those are the ones who are going to end up blowing up their account. So hard stop losses, not mental stop losses, and protect your capital. And that's number 2. That's number 3 in the rules of not losing money. So just understand these things, because a good trader is going to spend more time waiting than trading. You don't have to be actually involved in trading to be working the market. You can work the market by watching your chart, understanding the stock that you're in, understanding the movement. And if you're going to trade a particular stock, which is what I would recommend, know a stock, know it back and forth, know it like you know your lady or your man, and know that what makes them happy and how to please them and what they're waiting for, and do the same with the market. The market wants you to wait. The market wants you to be patient, and the market will reward you for patience. So finally, what you can do to help yourself and to help you along your journey is journal everything. Write your plays down. What made you get into that play? Why did it go against you? Did you get in too late? Did FOMO get you in that play? Did you stick to your rules? And if you didn't, then fall back. Understand. Go back and do your checks. Journal your emotions and see how you felt. Did you get excited, or when you saw a red candle, did you get depressed, or did you get down? Or try to stay balanced. Try to find a balance. And a journal will help you find that balance on where you panicked at, where you should have pounced at, and things like that. So if you want to see how I use that 1% rule or 2% rule, I trade live some days, not every day, because once I get the following and the request, and tomorrow, which will be Sunday, I have a video with my top 2 or 3 plays for the week, that if you want to make some money, you check my past videos. I'm on target when it comes to plays that go up, when it comes to stocks that are positioned and are ready to move or ready to bounce. So I'm not going to keep this over 10 minutes. I'm out. Please like and subscribe. Hope this helped this video get to 500 likes. I'm not going to say 1,000 like everybody else. I'll be happy getting to 500 likes. And I'm going to keep the information coming. Keep trying to help you guys the best way I can to navigate these markets, and not only to make money, but not lose money. With that being said, I'm out. Peace.